Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Dima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing a nice rally to start this week. Yesterday, in particular, on Wednesday, was a risk-on day. We had electric vehicles, technology, REITs, home builders, consumer discretionary, all leading the market higher. Conversely, of course, the more defensive areas of the market were the laggards. So you have pharmaceutical stocks within there, telecom, just as an example, precious metals as well. All eyes, of course, were on this morning's CPI print out of the United States. So an inflation reading and therefore what the Fed may or may not do. And it came in exactly in line with expectations, down by 0.1. So now the year over year reading is 6.5%. Again, that's down from 7.1% on an annualized basis. So in other words, the bulls are leading the charge here with the belief that the U.S. Federal Reserve, given the fact that inflation is coming down, will in fact cut maybe by about 50 basis points in the back half of 2023. That is the bullish case, but there's still a lot that remains to be seen in terms of how sticky inflation is. So we'll continue to keep our eyes on those readings. Consensus does believe that the Fed will sit on the sidelines and, as I say, actually lower rates or pull back on that tightening. So the bulls are very much in charge of the markets right now. Earnings, of course, in focus. We've got the big U.S. banks kicking off the earnings season, fourth quarter earnings season, starting this Friday. Tomorrow, we'll have J.P. Morgan as well as Wells Fargo and B of A all reporting their most recent results. The themes, of course, will be that we've seen strong net interest margins coming out from the banks, capital markets likely to be on the soft side, fixed income and commodity trading likely higher, investment banking fees likely lower, and equity performance somewhat mixed. So on their equity trading platforms, somewhat mixed, just makes sense. There's been so much volatility, means a lot of money managers have actually, quite frankly, been sitting on the sidelines. So bottom line, I think we can expect that the U.S. bank earnings will be somewhat fine. Keep in mind, of course, that the fourth quarter bar for expectations on the earnings result is really very low. I think what's going to be key and critical for the stock performance will be what we hear from the company managements as it relates to their 2023 outlook. So guidance is going to be very key. But of course, as I say, the bar has been set low. So we'll see if bad news can still equal positive stock performance. That is, of course, if they lower guidance, which we've certainly seen a lot of. In fact, more than 20% of the S&P 500 companies have actually pre-announced. That's actually a very big number. Stepping aside for a moment in terms of looking at some of the stocks and where analysts see opportunities, we've actually seen some upgrades in the home builder sector this week, Lennar, Pulte, as well as Toll Brothers. And we're also, of course, continuing to hear from various strategists as it relates to their outlook for 2023. PIMCO, the bond kings, largest bond money managers out there, they are bullish on bonds for 2023. And Goldman Sachs actually says that, there's probably some downside is constrained for the outlook as well. I'd also just point out, just to be able to keep our eyes a little bit on the Bitcoin area of the market. And accordingly to the Washington Post, FTX has recovered more than $5 billion in assets. Away from that, we're keeping our eyes, of course, on the TSX. We're seeing a little bit of choppy trading today. The energy sector is the outsized gainer. That, of course, follows a 3% rise in WTI yesterday and a 1.3% rise in the price of oil today. So helping the energy sector here on the TSX. And we did see some moves higher yesterday as well in the Canadian markets. No major economic releases here in Canada today, but next week will in fact be quite busy. We'll have a CPI reading and also the fourth quarter business outlook and consumer expectations survey. And of course, following last week's strong Canadian job data, there is expectations that the BOC will raise rates on January the 25th. Lastly, I'll just leave you with the bull case. We've had certainly some very volatile markets. There's still a lot of unknowns as it relates to the U.S. Federal Reserve, but sentiment is really quite low. And expectations, as I said, the consensus, and it could be wrong, are that we will see the U.S. Federal Reserve pull back on their tightening. I would really strongly encourage you to watch my interview with Barry Allen this Sunday. He is an expert in the bond market and a real Wall Street, Bay Street veteran within the fixed income markets and understanding what the Fed will or will not do. That's on the Buck Stop here this Sunday. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs Sunday mornings at 9 a.m. Eastern only on the News Forum Network.